All right. What's good? What's good? What's good? Welcome, guys. Appreciate y'all for being here. Ready to go for a brand new week as we step into the second half of February. Got Agustin. What's up? What's up? All right, y'all. So let's get straight into it. Hope you guys had a good weekend. Valentine's Day. If you guys are single, then I hope you found something to do. But for all my people in relationships, I'm sure you were busy. But yeah, man, pretty chill. We are about 1 month from our next major event. From for those that are going to be tapping in through Akashex, we have our Gold Diamond Summit, March 14th, 15th. It's going to be a whole weekend thing. I posted it on a couple different places. If you guys check under announcements, I had posted it in the new Discord, which I'll talk about here in a second. But we do have this coming up. You guys can get your tickets. We are 1 month away. So that's exciting. This is the link right here if you guys jump over there. And you just gotta get your flights or drive or whatever you gotta do to get here, but it's gonna be super lit. So that is what we are excited for. But yeah, it's top of mind because I had some calls and planning to arrange to kind of get that thing underway for content and yeah, just some final details to make that event one to remember. Obviously, we have the Akashics cruise literally like leading right after that. You guys are going on the cruise as well. But yeah, man, next 30 days is gonna be a movie. So let's try to make as much money as we can for that event. All right. Cool. So last week, really February in general has not been my favorite month of the year. So far, January was just such a good month. And I don't want to sound like a broken record. Said that many times throughout the sessions this last couple weeks, but yeah, January just was spoiling us, honestly. Whether we realize it or not in the moment, compared to February, it's just not the same. So just kind of been taking what I can from the month of February so far. If you guys actually head over to YouTube, or if you go to the trade recap section of the new Discord, I actually did post this on Friday night, which was basically a recap of last week's trading, a couple break-even days, small winner days, losing days, but Thursday was definitely kind of like the highlight of the week for sure, which I talked about pretty in depth in that video if you guys want to go check it out. But it was basically the shorts that we had on NASDAQ where we had this huge move down here. So, we're trying to find as many of those days as we can, obviously, when we start trading this week. But yeah, we just got to see what's up. Crypto, I haven't even looked at crypto in the last like day or two. Yeah, we're still pushing the mid to high 60s now. For me personally, like something I've had my eye on mostly has been XRP at $1 or less. That's something I've been waiting for a long time. I've already been exited my positions since we started poking all-time highs here, which was like all the way back in July, June, around here. So, I mean, we're getting close to almost a year in the next couple months of that. So I've been exited a lot of my crypto positions. I don't know, like I don't really like buy and hold for years. I like to buy and hold for maybe a year or two. But once I can like 2x, 3x, 4x, like I had gotten into XRP at the 50s, right around here, and scaling out at almost about $3. It was like a 5-6x that I ended up scaling out. So I don't know. For me, if I can do 5x on cryptos, like that's crazy, people are just used to the meme coins and stuff where you can like 1000x or whatever, and there's people that dedicate themselves to that. But I mean, personally, I've just never had that approach with meme coins and stuff like that. I just never been something I've expanded into like that. But I like the major coins that are out there. Solana, Ethereum, XRP, Bitcoin, if you get them at the right prices. Like even ETH right now at 1950, coming back into all-time highs is more than double your money. Personally though, I don't want to really touch ETH until we get I think we can actually push below 1,000. Quite frankly, I think we're due to take all of this sell side liquidity. Like all the stuff that I teach on indices with Nasdaq is still the same thing when you look at the crypto markets as far as fair value gaps and all those other things. Yeah, I think Solana under $40 is something I'm interested in. Ethereum under 1,000, XRP under $1. The thing with Bitcoin is like you're not gonna get necessarily like those huge gains on your account because it's already just so established. It's already so high in price. I mean, there's always gonna be people who are like, oh yeah, you'll say that now until it hits 1 million. It's like, yeah, it's fine, but that's gonna take some time. So yeah, crypto, I don't really talk about it much, but it's definitely something that I've always participated in since 2018. But I do investing. I don't really do like day trading when it comes to crypto. So I really check it once in a blue moon, and I haven't entered any new positions in literally like almost a year. So that's me with that. All right, but where we at? That's 100. Okay. Oh man, yeah, Thursday. Well, that's what happened on the live session on Thursday. I did take like an L with that first swing around, and then we ended up taking the second entry that ended up melting. But yeah, it hasn't been like an easy peasy type of market where we're just getting our confirmations, taking them, and then everything's going just perfectly easy. Like I said, January was giving us that, but so far in February, all our entries have been something I had to work at. I had to be able to take a loss, enter a second position, manage a lot of break evens. I mean, yeah, it's just the conditions that we're in right now. Like I said, on the recap video, I kind of talk about every single day in a little bit more detail to kind of give you an idea of where I was mentally and what ended up happening. So you guys can check that out if you want to see that. But yeah, Thursday was definitely like the highlight of the week. At the end of the day, I've been talking about it for a while now, but sometimes people just don't understand like the right expectations for the strategy. Every strategy is gonna have either a high frequency of trades or not such a high frequency of trades. Depending on if you're scalping, intraday trading, what's your system, but like for me, this was a system where I'm looking to take about 3 to 7 trades a week, somewhere in that ballpark. The reason why I say 3 to 7 is because some days will be no trade days, and then other days maybe I take a second position or whatever. So this is kind of like the ballpark of how it could be. If there's a bunch of like break even trades and I keep entering in a specific day, maybe that number technically hits like maybe 10, but it's really the same trade that just kept hitting break even, if that makes sense. So it's not like a completely different idea. It's just me trying to re-enter the same trade that keeps tagging me out break even, if that makes sense. But yeah, between the no trade days and then having to enter a second position on the choppy days, it's somewhere between 3 to 7 trades. So when you really average that out, it's about 5 a week on average, right? So that kind of already lets you know, okay, well, if I'm taking about 5 trades on average per week, what's my risk per trade then, because if you tell me like, oh yeah, last week the only really, really good day was Thursday, it's like, wow, so you're telling me a whole week passed by and we only had one good trade? Well, yeah, basically. This day was very good. Wednesday, I kind of got lucky with that one R trade, and then Monday, Tuesday was just break evens, no trade day, and then Friday was a no trade day. So basically, if I missed out on Thursday, I was kind of like not really making anything for the week. So I will say, like, if you're not available to trade, then like if your availability on the charts is kind of questionable, like you don't really know when you can or can't trade. I mean, uh, it's tough. Some people work jobs, some people don't prioritize trading to like make the time for it enough. And so you're gonna have to adjust, and find different ways to trade, different sessions and stuff like that. But um, I think in reality, all I'm really looking to do is trade from usually 10 to 11. Sometimes, we don't get a trade from 10 to 11. It might come a little bit later, like at 12, 1 p.m. But really, like all of the best trades that you take with Liberty X, if you actually go and back test, like, hey, not just how the trade setup works, but like what have been the last like 10 great trades, like don't just look at all of the trades available, but like which out of the last like 10 really good trades, is there anything that is similar between them, and I don't know, for me, a lot of the times, like if you actually notice, the really nice crossover that ended up melting for a big profit came at 10:30, so 10:30, so that means that by 11 a.m., so from 10 to 11, right, on that day, basically we had a trade that ran for about 4R, right? Now, whether you close at 2R, because I do teach like, hey, you want to try to secure 2R as much as you can. So some people, sometimes they close 2R, like it's fine. I would rather people close 2R than close 1R, but definitely securing 2R plus. But the idea I'm trying to share with you is like from 10 to 11, this trade ran for about 200 points for a 4-to-1 with a 50-point stop. So I just noticed a lot of the best Liberty X trades do happen within the hour of that window. And if it comes later in the afternoon, like it's a hit or miss. Sometimes it depends if there was news or not. A lot of times the ones that cross over way later in the afternoon is because there's like FOMC or some type of delayed like PM news or something like that. But yeah, it's just understanding your approach to like a lot of like in a lot of detail. It's just some people don't maybe do the work of trying to identify the little patterns within a pattern. Like if you have one asset that you're trading with one strategy and you commit to it, there's not so much backtesting complications that go on there, because like, okay, if I backtest for a week, a month, 2 months, 3 months, whatever, I don't need to jump between 5 different pairs. My watch list is one asset, so it's not like we're trying to burn ourselves out trying to master a strategy. It's one asset, one session at one specific time of the day too, like 10 a.m. Monday through Friday. That's all I want you to study, right? And if you look at the last 3 months, you'll see like, damn, okay, there was this many no trade days, there was this many profit days, this was this many choppy days, and you start to get used to like, only looking at that. You realize there's only so many scenarios that can happen. And what do you do on choppy days? What do you do on days where the market's trending? Like, you can get into the details of the details of the details when you look at one thing at one time with one approach. But if you jump strategies and jump asset classes, it's very hard to be consistent or to know what you're looking for perfectly, because you don't have one set way. You don't have one set asset you're trading. You're just kind of like spread out everywhere. And again, some people like to do that and they make it work, but consistency might be an issue with those people, in my experience. The only profit day for me was Friday. I sent to your Telegram both position studying. Well, it just depends, like if you were trading Liberty X or not, because technically on Friday there wasn't a Liberty X trade. Because according to the strategy on Friday, it should have been a buy bias at 10 a.m. with the way that the 6 a.m. candle closed. But unless you were looking at like trading, I don't know, before 10 a.m., like I don't know what you were necessarily looking for. And I've been I've been showing like inverse fair value gaps and how to like find different positions like that. So if you took any sells that made some money, I would assume it came from like that 9:45 to 10 a.m. push maybe. But as far as Liberty X goes, like if we replay this, like I showed on the recap, heading into 10 a.m., it was a bearish bias. Sorry, I think I said bullish bias earlier, but it was a bearish bias, and we didn't get the crossover here. Like price just opened up at 10 a.m. and just completely took off. So that's why I say Friday was a no trade day if you're trading Liberty X. Oh, like regular Liberty stuff. Yeah. Oh well, yeah. If you took like a reversal model trade, maybe that makes sense. Like this push here that came on Asia high, then yeah, maybe that's probably where you made some money there. As far as the question from Stefan or Steven, the execution time frame, like when I'm executing, I'm looking at 5 minute and below for sure. But that's when I execute, like leading up into the trade, what I teach people is that you want to look at the 4-hour candle that comes before the trading window. So like I only look to take positions once 10 a.m. hits, and I'm looking to roll with the momentum of the previous 4-hour candle. Right? So this is like if you're in the academy, if you're in Akashex, if you've been watching this stuff, maybe you know this or not, but that's what you need to understand first. So the 4-hour candle is kind of like the highest time frame that I like to reference if you're looking to like intraday trade. Even if you're scalping, it's good to know if you're trading like the majority of New York session, because 9:30 market opens, New York Stock Exchange opens, and sometimes you have some crazy spikes that happen from 9:30 to 10. And there's ways to scalp that stuff, but personally, like this strategy was meant to kind of let a lot of the manipulation wash out and then catch the really good move of the session. Again, if everything lines up. If it doesn't line up, then it is what it is. You're not going to take a trade. But a lot of times, what happens in the previous candle, as far as the 4-hour candle, from 6 to 10, if it's a bearish candle, usually you're going to follow that up from 10 to 2 with another bearish candle. Even if it doesn't close bearish, for example, by 2 p.m., at some point from 10 to 2, you'll probably have the momentum of a bearish candle from the previous window kind of give you some selling opportunities. And vice versa. If it's a bullish candle, it'll give you some buys. But there's days like this where, like Friday, technically this was a bearish candle. But again, what are like the little details, or what is some of the little nuances that people may forget? Is like, yeah, it's a bearish candle, but is it a strong bearish candle? And the answer is really no. Now, why isn't it a strong bearish candle? Is because it's really a doji candle, meaning that the body is very small, right? You have kind of like an indecisive candle. So it closed bearish, but it wasn't a convincing bearish candle. Like it had a huge wick to the upside and it had a huge wick to the downside. So that just goes to show you that from 6 to 10 a.m., there was a lot of indecision about where the market wanted to go. And a lot of that is really just kind of washing out, people from the earlier sessions. That's why I have the sessions as a big focus of understanding why the market does what it does. Because if you look at Asia high and Asia low, right? And then you look at what happens as soon as the Asian session ends here, is you'll see that price manipulates the low of Asia and then gives a reaction going up. Right? So that is, I don't have to really tell you or make you believe me. It's just kind of obvious at this point. Like, if you haven't realized, if you pull up sessions, how every session high and low becomes, a very sensitive point of price that creates decisions, then that's something you should pay attention to first. Look at Asia, look at London, and you can see once Asia ends, we take the low. There's only two things that can happen. It breaks the low and keeps going, or it breaks the low and it reverses. And so that was something I always taught from the beginning with Liberty, was like looking at Asia and then catching either breakouts or fake outs, like reversals from those 2 points, right? So yeah, you can see Asia low gets manipulated, price goes the other way. And then the same thing happens with London. You have London session end, and then literally like at 8:10 in the morning, price takes the low of London and just shoots higher. Once it takes out the high of of what's it called, London, you can see right here what happens. Price wicks that and then ends up dropping, right? So every time we hit either Asia low, London high, London low, you see there's days where like this happens where you get complete reversals of all the points. And then, you know, like later, even later in the session, you can see price takes Asia right here, and then it drops again. So that's the number one thing you got to pay attention to, is like how sensitive the Asia high and low is, how sensitive London high and low is, and kind of start to use that as a roadmap to where price is going to want to go and why, right? So yeah, and I brought all that up is, you know, the reason why I brought all that up is because when we have that 6 a.m. candle that was bearish, even though it was bearish, it had a lot of wick to the upside and downside. So in reality, price was just kind of stopping everybody out in both sides, and the next window, it's a little bit harder to kind of read because you don't have a decisive candle. You don't have like a very strong bearish candle where you're like, hey, you know, super strong bearish candle is probably going to lead to another bearish candle. Super strong bullish candle is probably going to lead to another bullish candle, and vice versa. So those days where we get like that 6 a.m. candle closure and it's very weak, like very small body with some long wicks to both sides, that's how you know it might be a day where it's a no trade day, or price still kind of chops around because we don't have like a very convincing candle closure of the higher time frame. So if the higher time frame is indecisive with big wicks, imagine the lower time frames. They're gonna do the same thing, and those days might be harder. Like if we go back to Thursday, and I'm doing this blindly, I don't even fully know, but you know, let's see. So at 10:05, if we go back to Thursday, okay, this is a perfect example of the difference between Thursday and Friday, and why Thursday produced a really good trade and why Friday did it. You know, look at the difference of this candle where you had, yeah, a wick to the upside, right? But then candle closed very strongly bearish. Like you have a huge bearish candle with a big body, right? It's not like a doji candle like this one, for example, in this moment where it's a small body, a lot of wicks. This was a more decisive, strong closing candle. So when you have those candles that are very, you know, sound with like the direction that it's like very sure of where it's trying to go, it doesn't mean that this next candle can't close bullish and come higher. It doesn't mean that. It just puts probabilities on your side. You know, people keep always looking for certainty when it comes to trading because, I mean, humans want certainty. Like you want to know something is going to work before you put risk, you know? But here's the thing, risk is because there's uncertainty. There's no such thing as risk if there's certainty. You get what I'm saying? So when people trade and they hear about risk to reward or how much are you risking per trade, but then you're also looking for certainty in a strategy, it's just a complete, like it's a paradox. It's contradicting. You know, so stop looking for certainties. It's not gonna happen. You know, it's about probabilities, and you just want them to be on your side. So, yeah, that's important as a mindset thing to just kind of know that's how you want to think about trading. And then once you kind of know like how many trades you expect to take per week, the lower it is, the more you could risk. The higher it is, the less you should risk, percentage wise. And really, you know, your percentage is just something that should be able to keep you in the game through a bad losing streak. Like if your strategy can't protect you, like if your risk approach doesn't protect you from having 1 or 2 bad weeks, then you're probably risking too much. The only time I ever tell people like risk to where you would lose your account in a week or two is if you're trying to pass an evaluation of like a futures prop firm or something, and you're just trying to get it done within a week or two, then you want to use a week or two of risk. If you're giving yourself like a 4-week buffer, it's going to take you probably that long to pass the accounts, you know? So that's what you got to kind of dial in, is like, you know, how many trades am I taking per week? That gives me my percentage. On average, if you're trying to pass like a $50,000 account, you know, with Top Step or Alpha or Lucid or Apex, whoever it is, you should be risking more times than not, like between $200 to $300 and probably 200 But it will take you some time to pass the account because you're gonna need to stack a lot of wins, obviously. But this is definitely where you want to be, especially when you're funded. You probably want to keep that to like 200 or less just to be able to keep the account. If you're trying to pass the evals, you can be much more aggressive. You can go 300 plus. You can go 300 to 500, something like that. But you just got to keep in mind you have a $2,000 drawdown, right? So if you're using like $500 risk per trade, you got 4 trades before you burn the account. And that can happen in 2-3 days. So if you're using like a $500 risk per trade, like you'll probably pass the account very fast if you happen to catch a good streak and the market's kind of like behaving. But even if you know what you're doing, if you're risking too much, you're just not allowing the sample size to kind of get back in your favor. I think if you stick to 200 to 300, it might take you longer. But I know at least if you have like a bad week, risking 200, you might be down like 800 for the week, like worst case scenario. I mean, it shouldn't even really get that bad, but whatever. Even if it does, you're not even halfway to blowing the challenge, like to blowing the account yet. You know what I mean? And if you're risking 200, it means that our green days should be like, I mean, at least 200 as well, like a 1-to-1 if you close a 1R, but your 2R trades should be about $400+. So you can make up for an $800 loss bad week and like 2 decent trades. You know what I mean? And this is just math, bro. Like this is just simple math that you guys need to kind of work out and understand about the size of your account. What's your risk? Because I don't know. People sometimes they see 50,000, for example, and they think it's 50,000. In reality, it's 2,000, right? Because that's what you get. That's what you have of risk before you lose the challenge. So in reality, you're not trading with 50,000. You're trading with 2K, right? And you just gotta make that 2K stretch. If you do $200 per trade, you have 10 trades before your account's gone. So then you ask yourself, okay, Liberty X, in every 10 trades, how many times can I win? How many times can I lose? And so if you're risking 200 per trade and you're taking 5 trades a week, it'll take you losing 2 weeks in a row to burn your account. Those are things you just have to know these things. If not, you're going to be trading blind with your risk. It doesn't really matter if you're trading Liberty X, if you trade support and resistance, inverse fair value gaps, Fibonacci, like it's all the same. The math is still going to chase you. With Apex, sometimes I hold trade and it goes near 2R and then it hits 1R. Yeah, here's the thing. If you're trading Apex or like any type of firm that has intraday trailing drawdown, dude, honestly, like you have to really trail stop aggressively, and most of the times what that means is you're gonna take a lot of 1R trades. This is what it is. There's a reason why a lot of people, down talk not just Apex, but really any firms that have intraday trailing drawdown, because at the end of the day, that rule, they try to say like, oh yeah, it's teaching you to never give back profits, but let's be real, like people know that rule is just to make it very difficult. And a lot of times if the firm has intraday trading drawdown, usually their accounts are a lot cheaper because violating that drawdown is so much easier than not having intraday. Like if you have end of day trading drawdown, it's much easier. So personally, I try to like prioritize, especially if you're stepping into futures, transitioning from like CFDs, which I know a lot of the community might be because you're used to trading on TradeX or like Forex brokers or whatever. Like you would probably want to go with firms that have end of day trading drawdown and not intraday. Because I don't know, like intraday is just tougher to manage. But if you're scalping and you can like, trail stop very aggressively, you're gonna have a lot of half R trades, a lot of 1R trades. But if you're picky with your setups, like it'll work. And sometimes, we get those certain trades where the candles start to really like push, and you can trail stop aggressively and still milk the position. Like, again, it's hard. It is very hard. But there's situations like, you know, Thursday's trade, where you might have a 50-point stop, and you know, maybe you get tagged out the first time like we did on the stream or whatever, and then once you get that next crossover, you enter, right? If you look at like 0.5R, you have 0.5R here, right? And then you have like 1R here. And then really from 1R to the next point of price, where price starts to like really kind of pull back a little bit, is once it starts pushing like 2R. Like once we get to 2R, it's about roughly like, so it goes from 2R to about 2.5, and then it goes back up to 1.75. So it goes from like 2.5 to 1.75, which is like 0.75. And then after that, it just keeps pushing again. So the only thing that sucks about intraday trading drawdown is anytime you get those nasty pullbacks, like, you know, you don't really want to be stuck in this where price kind of goes back and goes down and goes back and goes down. So you do have to trail stop much more aggressively. So if you're gonna use firms like that, you're gonna have to be very comfortable with going for as many 1R trades as possible, and trail stopping super aggressively. It's not fun. It's really not fun. So I like to use firms that don't really have the intraday. Because Apex is probably the one that you would want to have even if it has intraday, because of how many accounts you can have. So even if you are, you know, scalping or whatever, with 20 accounts, you can still do a lot of damage even with 1R trades. It's just the hassle of getting funded with those type of conditions that is a turnoff for a lot of people. So yeah. But end of day trading drawdown makes a lot of this much, I will say. And look, at the end of the day, we're trying to milk all of these firms as much as possible to just be able to put into your own accounts that don't necessarily have, you know, all those drawdown rules. You still want to be, honestly though, like that habit of treating your risk the way that these firms show you will help you preserve a lot of your live accounts when you get them built up. Because the last thing you want to do is risk this type of way, and then you get into a live account and you think you could just start risking heavier on there, and it's like, nah, don't do that. So, but yeah, this is more or less like the formula that makes sense that I've seen work for my psychology and just being consistent. Because once you risk more than 300 per trade on those 50Ks, if you go on a good streak, you'll pass it fast, but you can burn an account in less than a couple days. Like you risk 500 per trade, it can literally be like 2-3 days and your account's gone if it's the type of conditions that February has been giving us. But on the flip side, months like January, you're risking $500 per trade and you're freaking passing those evals in like 2-3 days. So it goes both ways. But definitely once you're funded, if you're risking something that you can lose your account in less than a week, it's too high. Like, you don't know how it's gonna be. I'd rather give myself a minimum of a 2-week cushion to lose my accounts. So take it how you will. On a live account for 50K, like once you're actually funded with the 50Ks, bro, honestly, like I would say that you want to give yourself minimum that same 2-week buffer, like risking 200 per trade, maybe even 100 per trade. You know, I trust the strategy enough to be able to survive 2 weeks of drawdown. But if you really want to like get your first payouts, or like just try to at least get consistent payouts to start off, just do like 100 per trade. Because if you give yourself $100 risk per trade, you know, it's gonna take you 20 trades before you burn the account. If you do 200, it's gonna give you 10. So like, you shouldn't be losing 10 trades in a row. So being with 200 should be safe. But I know with 100, like, you're definitely good. You're definitely good. It's just you're gonna want big payouts. That's the thing. So if you have like a 10R month, for example, right, and you're risking $100, right, and you do a 10R month, well, how much money is that? It's $1,000. And then if you profit split, you know, 90-10, 80-20, whatever the profit split is, you can do the math of how much money you're keeping. Now that's on one account. you know. So if you can do 10R, have $100 risk, you make 1,000, and you keep like 70%. Let's say you keep like 700, right? Now the key is how many accounts do you have? If you have 5 accounts that are doing the same thing, now you have 700 by 5 accounts. So that's really where the magic is. Like if you wonder how people make good money from it, it's not from risking a crazy amount and getting a big ass payout from one account. It's because you have 5, 10, 15, 20 accounts. And that's because you're utilizing multiple firms, keeping a low risk on each and every single one of them once you're funded, so you can keep the account connected to a copy trader or rotate the accounts where you're like, okay, I'm going to trade these 5 accounts until I hit payout. Then I'll move on to this firm and trade those 3 accounts. And then if I get a payout on that one, then I'll move to the next firm that I have another 3 accounts. So you can rotate or you can copy trade. If you copy trade, you're just risking that if you lose your mindset, like if you lose your psychology and you go on tilt, you're going to lose all of the accounts at the same time, however many that will be. What if you only have 1? It's the same thing though. Like the way you would trade 1 is how you should be able to trade 20. Because when you have 20, you're still trading 1 that gets copied into 20. Or you might trade 1 account that copies into 3 or 5 within the same firm, and then you jump to another firm. So it's the same mindset, it's the same way that you're treating it. Oh, by the way, 5 times 7, that's what, 3,500? But it's about reinvesting. You know, if you have 1 account, you're gonna want to take that payout and you're gonna want to get more evals. You know, get another 2 accounts or whatever with that account. Because once you get that payout and you go and buy 2 more accounts, that'll probably cost you like $100 or $100 something dollars. And then once you pay the activation, basically like each account will cost you roughly like $200. So you take that 700, you maybe get 2 more accounts, for example, that's $400 when it's all said and done between the eval and the activation. You know, you're still up $300. The rest you reinvested it into more accounts, and then you can start touching this, you know. And again, there's some people that will like look at, for example, $3,500 and they're like, oh, I work a job and I make that much a month from my job. You know, why do I want to go through all this work to make this much money? But again, this is just risking $100. If you risk 200, which I still think is very doable, all of a sudden that number now jumps to $7 grand. And that's if you have a 70% profit split. If you have like a 80%, then that number is 800 here, which ends up being much more. You know, so you can keep moving the numbers around to whatever your situation is. But the idea is that you can risk $100 to $200 per trade to give yourself that 10 to 20 trade barrier within the accounts. And then from there, it's just getting the funding and then getting as many accounts as you can to stack them up. Because if you get, once you stack, that's when all the money's gonna flood in. The hardest part is just getting the funded account and then getting like the multiple accounts all passed together. That is the biggest obstacle. It's just consistency, discipline, mindset, getting funded, and then creating multiple accounts. But once you've got into that part, dude, like you've done the hardest thing. Now the rest is just basically not choking. You know, like you can't just be like, oh my god, I'm funded now, this is so different. It's not. It's the same situation as when you were passing the accounts. The only difference is like now you're, you know, about to touch money. You know, some people that scares them. Some people like it you know, it messes with them. But you know, that's on a per person basis. You know, some people get scared, some people are just go-getters. You know, like you gotta work on yourself. You gotta like be a savage. Can't be scared. All right, we're doing a lot of blobbering at this time, but all of that is very useful though. Like people that understand the route for the funding and stuff, that is super important. This is just how to extract the profit from it. But yeah, I'm gonna drop the schedule soon now. I recently created the Discord. I know a lot of you guys have probably tapped into it already. We're kind of closing in on 100 people, which is cool. Once you're on here, this is free, right? So I know some of you guys are in Akashics, some of you guys may not be in Akashics. Um, all of the trades that I ever send are only ever on Akashics, right? So live sessions, trades that I call out, all of that is always going to be for people that are Akashics members. This is just like a very organized, great way for me to connect with everybody, whether they are taking the step to become like a member of the paid community or whether they're just kind of like, you know, diving into trading a little bit, want to get some advice, want to start, getting their feet wet, want to have a place to have conversations. So yeah, the community chat, we can talk in here, but obviously we're not going to be dropping no trades. Like all of that stuff is in-house in Akashics only. But we can talk whatever in here. I'll have my schedule that you guys will see on here, with all like the high impact news that I see that stands out to me. You can see like what days we're doing the market outlook, Spanish sessions, the live trading in English, any other stuff that we got going on. I'll do my best to recap like on a daily basis any like trade alerts that I do send through Akashics, with my thoughts on it. And I did a recap of the whole week here on YouTube. So yeah, between that, you guys can drop here in the testimonials as well. Somebody just got like a 4K payout recently. Yeah, any success stories, profits, you guys can drop them in here. I have the resources where we have the PDF for Liberty X, so you guys will be able to access it through there now, as well as the funding blueprint, which kind of talks about the risk per trade stuff that I've been talking about this whole time today. So there's a lot of great free resources here. Obviously, it's never going to be the same as being able to like be on the sessions, trade live with everybody. Like that's why it's so worth it, obviously, to be in Akashics. But I just wanted to be able to at least kind of meet people halfway with some free stuff, so that eventually you guys can decide to become a part of Akashics if you're not. But yeah, other than that, I have my socials. You guys can follow me on there. Mindset stuff. I'm gonna post in the prop firm section soon, like a breakdown of all the top like futures prop firms, how their rules work and everything. So this will be like my hub for sure to like give you guys updates on any events, calls, trades, everything that has to do with me on here. So definitely tap into the Discord if you're not. You guys can see the links in the description of the videos and on the lives. But yeah, for the last thing I'll talk about, which is like what I expect for the rest of the week. Market structure wise, we are obviously like bearish at this point. We kind of got close to all-time highs, gave a rejection, recovered, but didn't make a new high. And then we ended up dipping off again, making a recovery, but we failed to make new highs, got another drop again, and that's where we're at now. So for me, if we're gonna keep focusing on getting to like the sell side liquidity, because we've already taken out these lows, and these lows, right? So all of the liquidity from the past like month or whatever this is, what is this? December. So this is 2 months of liquidity that's been basically washed out here, with these moves that we've been seeing. So the only liquidity that's really like left that stands out is, well, obviously like this low that we created from Thursday the 5th, about 10 days ago, and then this low from November 20th. So these are the two lows that are like the main focus for where price can get to from a sell side liquidity perspective if we're going to keep going lower. And if we are gonna, maybe there's a chance that we respect this low, maybe even respect this one, and we do come higher, then basically all of these highs here would be the first, buy side liquidity target. And then we have this huge drop off, fair value gap that we formed on the 3rd of February. So that's what I have marked. Like you always see on my charts, I try to mark like the most obvious stuff. So if we're selling, these are my targets. If price is buying, then we'll look to target this and this fair value gap, and then reassess on a daily basis kind of like where we're at. But I always do like a macro analysis to start the week, but like this can change a little bit from now to New York session tomorrow. And tomorrow's a holiday too, so tomorrow I think trading hours will be limited, depending if you're like on a futures prop or not. There should be limits on the schedule. You guys should all have emails from wherever you're trading. Like if you're on any futures platforms, you should have an email that shows like the schedule for whether you could trade or not, the times, all that stuff. If you're on Trade Locker, usually there's a little button up top with like a little green or red light, and it'll show you the hours that you can trade. So just pay attention to that because tomorrow's not really a trading day, honestly. Sometimes we do find positions on holidays that could work, but I have very low expectations, and we have to be out of those positions very early if we even find something. So for the most part, nothing to force tomorrow, and then we have FOMC on Wednesday, which is going to be the main thing of the week for sure. Unemployment claims is going to be important. Like we have PMI, so like Wednesday, Thursday, Friday for sure is the news days, but FOMC is always going to be like the news of the week if it's coming out. So definitely all eyes on FOMC, and basically the rest of the 2 days will be like the aftermath of it. So I'll put that on this weekly schedule in the Discord, nice and orderly for everybody. But yeah, the first real trading day is gonna be Tuesday, and I say the aftermath of FOMC Thursday and Friday. So Tuesday, Thursday, Friday are probably gonna be my favorite days to trade. When we have FOMC on Wednesday, to catch a 10 a.m. move is not always the best when you have a high impact news event coming later. Sometimes price likes to sit around until 2 p.m., 3 p.m. So we'll see. But yeah, that's where we're at. So let's see. Maybe we catch a holiday trade tomorrow, but I don't ever force holiday trades, so we'll see if there's anything worth taking. But yeah, pretty much it. So yeah, I don't know if you guys got like a last question before we get up out of here. But if not, we'll call it a day. Tomorrow I live stream in Spanish at 11 a.m. Eastern on Akashek. So if you guys are bilingual, I'll catch you there. All right. Oh, and by the way, Hussein, if you're talking about 50K, that's a futures account, then yeah. But if you're trading CFDs where you have that $5,000 drawdown, like a 10% drawdown, like on a CFD prop firm like TradeX, then I would risk 500 per trade. But if it's a futures one that has like a 2K drawdown, then yeah, 200-300 should be like the sweet spot. All right, cool. So yeah, I'm gonna call it a session, guys. Appreciate y'all. I'll see you on Akashx throughout the week and on the Discord as well. So much love. Appreciate you guys, and I'll catch you on the next one. All right, let's get it.